The U.S. economy is strong and getting stronger, and the case for a recession this year is getting weaker and weaker. In today's video, we're going to look at the latest data for the U.S. economy to see where the latest strength is coming from, as well as assess the risk factors that could lead to a change in these trends and push us closer to a downturn. Let's get into it. In the first week of October, the Bureau of Labor Statistics released the latest job figures that blew away expectations. Non-farm payrolls increased by 336,000 in September, nearly double the 170,000 that was expected. This is now the 33rd month in a row of positive job growth. Not only that, but this was the largest job gain since January of this year. An economy in trouble doesn't usually have an acceleration in job creation. It's clearly a sign of strength. On top of that, we got new consumer spending data at the end of September, and it too shows great strength in the U.S. economy. The latest data release from the Bureau of Economic Analysis shows consumer spending is on track for its best performance since the fourth quarter of 2021. The Q3 data we have so far is for July and August, and if we calculate the annualized growth of those first 2 months of Q3 over the first 2 months of Q2, it comes in at 4%. Additionally, the U.S. trade deficit fell to a near 3-month low as the value of exports increased and imports decreased. All of these signs point to a strong third quarter GDP number and an economy that is doing surprisingly well given how high interest rates have gone in the last year. The Atlanta Fed GDP Now model is currently projecting a more than 5% annualized growth rate for Q3 GDP, and the consensus forecast is nearing 3%. What this all means is that a 2023 recession is not going to materialize unless we have some kind of black swan event that takes place before the end of the year. That would basically shut down the entire economy, similar to what happened at the onset of the pandemic in 2020. But what about all the risk factors to the economy that could lead to a 2024 recession? In my last U.S. recession and economy update video last month, I highlighted two major concerns moving forward: a weaker consumer from reduced savings and renewed student loan repayments, as well as a potential crash in the commercial real estate market. The restart of student loan payments is certainly a reason for concern, but it is still too early to tell with any certainty how it is impacting consumer spending right now. We won't get October spending data until the end of November, so until then, we'll just have to keep our eye out for anecdotal reporting in the media to see if it's having an immediate impact. For the commercial real estate market, loan defaults have been on the rise, putting pressure on an already strained financial system. Office properties are some of the most concerning. The overall office vacancy rate in the U.S. came in at 18.2% in the second quarter, the highest level since the 2008-09 financial crisis, and there is still no sign of a recovery in process in the broader market. This will be another key area to watch as new data comes in over the next 3 to 6 months. And now we have a third risk to the U.S. economy developing. The war between Israel and Hamas has the potential to escalate into a larger regional conflict, which could put significant upward pressure on oil prices. After the onset of the conflict on October 7th, oil prices jumped from $82 per barrel the day before the attack to $86 per barrel when markets reopened the following Monday. Higher oil prices hit virtually every sector of the economy due to how energy dependent we are in our modern society. I'll be staying on top of all of the developments, so if you want to know how everything plays out and what the effect on the economy will be, make sure you're subscribed to this channel and hit the notification bell down below so you know right away when my next video comes out. I try to post a monthly video on this channel recapping the developments since the last video. If you want to see some of my other content, check out my other YouTube channel, Real Estate Watch, for some of the best forward-looking real estate analysis you can find on YouTube. If you found this video useful, go ahead and hit that like button to support the channel, help it grow. Thanks for stopping by, and I'll see you in the next video.